In this video, I will show you how the majority of traders use continuation patterns in the wrong way, and I will teach you how to use them efficiently. Now, let's try to see the difference between these two symmetrical triangle patterns. Yes, they look the same, two perfectly symmetrical triangles, but there is one difference between them, its market condition. On the right side, we have a symmetrical triangle on a ranging market, while on the left side, we have a symmetrical triangle on a trending market. This small difference can lead traders to a huge difference in results. Ed Sakota said, "My style is basically trend following, with some special pattern recognition and money management algorithms." Richard Dennis said, "Whatever method you use to enter trades, the most critical thing is that if there is a major trend, your approach should assure that you get in that trend." Larry Height said, "If you diversify, control your risk, and go with the trend, it just has to work." By listening to these famous traders worldwide, we have to understand that you always have to trade with the trend. But how can I identify market trends? The most significant way is by looking at the highs and lows created by the price. An uptrend is recognized as a series of higher high and higher low, while a downtrend is recognized as a series of lower high and lower low. A ranging market is a market that moves within a specific range, without showing any clear direction or trend. Or you can use a moving average to identify market trends. If a moving average is rising, it can signal that the market is in an uptrend. Conversely, when a moving average is falling, it can signal that the market is in a downtrend. In addition, if a moving average is straight, it can signal that the market is ranging. Now let's get back to continuation patterns. Firstly, let's understand how these patterns are formed. Each continuation pattern consists of two lines, an upper line acting as resistance and a lower line acting as support. These lines can be either horizontal or diagonal. Now, let's quickly go through each continuation pattern. The triangle pattern has four types. 1. Symmetrical triangle. This pattern is formed from two swing lines. The upper line falls and works as resistance, while the lower line rises and works as support. This pattern can be bullish or bearish. 2. Descending triangle. This pattern is formed from two lines. The upper line falls and works as resistance, while the horizontal lower line acts as support. The descending triangle is always bearish. 3. Ascending triangle. This pattern is formed from two lines. The upper line is horizontal and works as resistance, while the lower line rises and works as support. The ascending triangle is always bullish. 4. Expanding triangle. This pattern is the opposite of the symmetrical triangle and starts with a small range that expands to a bigger one. It's rare and difficult to trade. The expanding triangle can be bullish or bearish. The wedge pattern has two types. 1. Falling wedge. This pattern is formed from two falling swing lines. The falling wedge is always bullish. 2. Rising wedge. This pattern is formed from two rising swing lines. The rising wedge is always bearish. Rectangle pattern. The rectangle pattern is formed from two horizontal lines. The rectangle can be bullish or bearish. Pennant pattern. The pennant pattern is the same as a symmetrical triangle, but formed from 20 candles or less, followed by a sharp move. The pennant can be bullish or bearish. Flag pattern. The flag pattern is formed from either two horizontal lines or two parallel swing lines, containing 20 candles or less, followed by a sharp move. The flag can be bullish or bearish. Is spotting a continuation pattern in a trending market enough to make profitable trades? The short answer is no. To make profitable trades, you need specific rules to know when to enter and exit a trade, either in a profit or loss. But before we delve into how to enter and exit a trade in a continuation pattern, let's try to understand the three types of breakouts. The first type is the regular breakout. It happens when the price breaks the key level without making any pullback or retest. This type of breakout is hard to trade because the stop loss will be bigger and there are a lot of fake outs and liquidity grabs happening after a regular breakout. The second type is the retest after breakout. It happens when the price retests the key level after the breakout. Most traders use this type of breakout because the stop loss will be tight and the profit will be big. It works super amazing with a reversal candlestick pattern. The third type is the pullback before the breakout. It happens when the price is rejected from the key level before it breaks. This will help you enter a trade without waiting for a retest and is more efficient than a regular breakout because it has a tight stop loss and will decrease the time you get trapped in a fake out or liquidity grab. In this section, we will outline the criteria you should follow before taking any trades using the continuation pattern. 1. Identify the market trend. Look to buy during an uptrend and sell during a downtrend. 2. Spot continuation pattern. Draw the upper and lower bands of the pattern. 3. Candle confirmation. Wait for a candle to close above the upper band before taking a buy position and below the lower band for a sell position. 4. Identify the type of breakout. Only enter a trade using a breakout with a retest and a pullback before the breakout and avoid regular breakouts. 5. Stop loss. Place a stop loss below the previous low for a buy position and above the previous high for a sell position. 6. Take profit. It's up to you. You can close your position at 2RR, or you can close 80% and use trailing stops for the remaining 20%. Now, let's apply what we've learned in this video to some examples and test it in the real market together to fully understand the concept. In this crude oil example, we are looking at the 4-hour time frame. We can see that the market is currently in an uptrend, and there is a symmetrical triangle pattern forming. Before the breakout, there was a pullback, followed by an engulfing continuation candle that closed above the upper trend line. This gives us a strong confirmation for a buy position. To manage our risk, we will place a stop loss order below the swing low and set our take profit level at 2 times the stop loss, which means we have a risk to reward ratio of 2:1. In this example of crude oil's daily time frame, we can see a falling wedge pattern on an upward market trend. After the breakout, there was a retest, followed by an engulfing continuation candle that closed above the upper line of the pattern. This gives us a strong confirmation to enter into a buying position with a stop loss placed below the swing low and a take profit set at 2 times the stop loss, which means a risk to reward ratio of 2:1. In this Bitcoin example, we are observing the daily time frame. The market is currently on an uptrend and an ascending triangle pattern has formed. Before the breakout, there was a pullback and an engulfing continuation candle closed above the upper trend line. This confirms a buy position with a stop loss placed below the swing low and a take profit set at 2 times the stop loss. In this example of pound yen, we can see a flag pattern in the 30-minute time frame. The market is trending up, and we can observe a retest after the breakout. Additionally, there is a pin bar continuation candle that is closed above the upper band of the flag pattern. This confirms a nice opportunity for a buy position. We can enter this position with a stop below the swing low and set our take profit at 2 times the stop loss. In the previous examples, we use the pin bar and engulfing continuation pattern. If you want to learn more about these patterns and an efficient way to trade breakouts, check out our first YouTube video. If you enjoyed this video, please help us grow by smashing the like button and subscribing to our channel. Don't forget to turn on the notification bell to stay updated. If you have any questions, feel free to ask in the comment section, and we will answer them as soon as possible. Thank you for spending your precious time with us, and may God grant you success.